Disclaimer: this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's good, you guys? Welcome back to another episode of the Rich Off Gains podcast. This is episode 19. It's your boy CB checking back in with you guys. Happy Money Mondays. I hope you all are doing well today. Let's get right to it, man. But before we get right to it, I just want to do a heat check, man. I want to make sure everybody here is blessed, highly favored. They had a great weekend. You know, you guys enjoyed your time with your family, friends, and loved ones, whatever you guys had going on this weekend. I hope you guys enjoyed yourselves. You know, for me, I was blessed to go to my girlfriend's brother's basketball game. They won state champions, state champions, back-to-back, by the way. So they went back-to-back this year. So that's pretty cool to see that. And yeah, just other than that, you know, family's good, life is good. So I'm just thankful. Hopefully you guys are the same. And on this Money Mondays, you guys, I want to make sure you guys remember that everything's about perspective. You know, the way you perceive things is important because it can be a deciding factor in your success and how much you grow, right? So don't confuse correction as rejection. That'll be the number one thing that disables your growth. So if you're confusing, you know, you making a mistake, like for example, if you're an investor and you day trade and you buy prop firms, you confuse you failing the prop firm as rejection, that you're not able to be a profitable day trader. That's not the case. That it really just means that, you know, this is whatever you did in that process of failing was something that you need to learn to better do, in other words, correct, so that you can become the profitable day trader. So that's what I mean by perspective. And it's going to go really well with my topic as well, but just making sure to keep in mind the way you perceive things being done to you, not always is negative. You know, perceiving them is sometimes good as well, because most times they are for good reason. And I think that a lot of times people get lost in the results from the thing that they're doing, that they forget what the purpose of the loss or the reason why that happened was. So just keep that in mind. This is food for thought as you go into this week. Hopefully you guys are doing well. With that being said, let's get started. Today, we're going to talk about what it takes to become a risk taker. The people who are at the top of the food chain, the people who are, you know, the 0.01%, the 1%ers, the top 10% even, the way they became categorized as that is simply due to them being able to take extremely big risk. All right, so what differentiates someone who's in that kind of position from someone who's not? Is, to me, it's simply risk. It's simply their capabilities and their ability to take on a greater amount of risk. Because a lot of times people get fearful, right? That's one of the characteristic traits a lot of people have, is their fearfulness of failure, their fearfulness of, you know, taking a risk, their fearfulness of doing the thing differently from what they're normal accustomed to doing or comfortable doing. And just so many other things. They're just fearful in the process of doing something that they've never done before. They're fearful of failing. They're fearful of all these different things. They're fearful of outcomes that might happen, that might not happen. They don't know what can happen. They're just fearful. It's just built up anxiety and fear. And people who take risks, they don't really let that fear consume them, because they go into it with a clear conscience, because they understand what's at risk. And that's the one thing that people don't get. They confuse risk for reward, right? So let's dig deep. Let's dig into that. What do I mean by that? most times people don't understand that risk is limited while reward is unlimited. So you can risk $1,000 and know that the most amount of money you'll lose is $1,000. But but you can risk that same $1,000, and now that $1,000 can turn into $10,000, or even $100,000, or maybe even $1,000,000. That's the possibility of the reward. It's so much greater than what you're putting at risk, that the risk alone is outweighed by the reward by a multiple that is unbounded by reality. And the reason that is because the it's just that's just possible. It's just there's so many success stories that you can look into and see time and time again, people taking certain amounts of risk and holding something for a certain period of time and seeing a greater return on the thing that they were risking just from holding it and waiting and being patient. And it's way better than what they put at risk. So just imagine if you were to put more than just $1,000, because now you're seeing a bigger return on something greater than 1,000. Now, yes, you're putting more at risk, but if you know what you're doing, it's not really risk. So that's the one thing most people don't understand when the word risk pops up. They think that it's just all risk and there's no reward. No, it's actually the opposite. There's limited risk and there's unlimited reward. So understand that going into this conversation. Another thing that we're going to talk about now is the characteristics of people who take risk. So what kind of person is the type of person that's taking risk? As I mentioned before, fearfulness. That's the type of person that's not taking risks. But fearlessness, people who are fearless are the kind of people who are taking risks. They don't let the thought of the idea consume them to be fearful of the thing that they want to pursue. They're going to do it regardless. They're not fearful of the outcome or the things that people might say about them control their ability or inability to take the risk. They're fearless. They're going to take the risk regardless. They have a certain amount of confidence and abundant positivity about the thing that they're going to take the risk. So fearlessness is the one thing that most risk takers have when taking risk. Another thing is they're long-term thinkers, right? So a lot of times, most people think in a very short time frame. They think instant gratification, and now and tomorrow or next week. Long-term investors, but not only investors, risk takers, think in a longer time frame. They understand that some things might take longer and some things might take more time than it being an instant result, and they're okay with that. They're patient. They're planting a seed and letting it grow. They're not expecting anything to just instantly spawn and pop up in front of them out of nowhere. That's not how it works. It takes time. You have to be patient and wait long enough to see the result. It's just like making food. When you're going in the kitchen, you can use a microwave, but the food that's made in the microwave is going to give you a lower quality compared to the food that you're going to cook and take time to marinate and let it sit, and then put it on the oven, let it sit in the grease or the oil or the butter. And then, you're putting more time, effort, and energy into the thing. And so in result, you'll get a better quality product compared to the microwavable food. Another thing that they do well that most people don't is their willingness to better themselves. They're confident in them being the asset or them being the thing that will generate the result or the return. Most people aren't. Most people just don't feel capable enough to make a big enough decision like that, because growing up, you were brought into a world where your hand was either held, you went through a school system that told you what you can do and can't do at certain times, and you were reliant on someone else to give you a task. Risk takers create the task. Risk takers create the schedule. Risk takers create the opportunity. They create the The market, they do all of that. The person that's creating these things is the person that's taking the risk. So we have to be willing to bet on ourselves big enough to see these kinds of things play out. And if you fail, it's okay. It's a part of the journey. That's another thing that risk takers are willing to do. They're willing to fail. They have the willingness to fail and fall and lose because they understand that losing isn't just a loss, it's a lesson. They learn so that they can be in a position to earn in the future. You have to be willing to lose now and grow from those losses because as you're losing, you're learning. You're learning things that you did along the way that was a mistake and that was an error and that you need to correct moving forward so that you can get better at your craft. That's how you become a master at something, by losing enough times and knowing enough things about the thing that you're doing to then move the best way possible going forward. Take the shot, take the chance, and take the risk. Investment tip of the week. You gotta have a long-term time frame. Investing is not a overnight journey. Most people get day trading and investing confused. Day trading is something totally different from investing. Investing is what's going to help you build wealth, while day trading is something that's going to help you get rich. If you properly approach it, day trading is something that you can use on a day-to-day basis, Monday through Friday, sometimes Monday through Sunday, and you can show up in the market, take trades, get paid. While investing is the opposite. You're buying shares and you're holding shares for periods of time where it might be 3 months, 6 months, a year, 2 years, 3, 5, 10, 15, 20, and you're letting a company progress and produce results on your behalf, and so that you can see a return on your investment because the share price can go up and down. So you have to understand that investing takes time. It's not an overnight journey. It's not a meme stock. You're not buying and investing into something that's just it's not a casino. Like, you have to treat it, there are parts of it that are, but that's not the overall focus of it. The overall purpose and focus of investing is to let it sit and grow in value over time. It's like buying gold or buying a house. Just like gold, when you buy gold, and as you've seen, gold used to be worth 2,000. Now it's reached up to 55,000, 5,500. And so the prices of things fluctuate based upon the demand and the supply of that thing. So you have to understand these things going into investing, that investing takes time. You have to be patient enough and willing enough to hold through the up seasons and the down seasons, because there might be some seasons that when you're up, you want to take profits, and that's totally fine. If you want to take profits. But then there's times where you might not want to take profits because you might see a longer time frame on this company producing more greater results. And so in that seeing of the producing more time frame, greater results, you'll hold longer to see a greater return. And then there will be times throughout those moments where the market pulls back and there's aggressive sell-offs and the company comes down at a discounted price. Now you have to hold in those moments. Those are moments that you really need to hold, because you might be selling off in a moment where it's just cooling off for a bounce up, So that might be a time where you really need to be buying rather than selling, and, building a stronger position in the play so that you can get a better return later. So you want to be mindful of these things. And that's your investment tip of the week. Invest long term. Don't invest with the short term mentality. Over the weekend, I was doing some research, and I've been fascinated with studying the greats. The greatest entrepreneurs, the greatest CEOs, the greatest inventors. And so I've been going down a deep rabbit hole of Elon's journey and what he's been working on. And currently, what he's working on is a lot of space exploration, specifically with SpaceX, and then also his autonomous, AI services with Robotaxi, and then the Optimus robot. So what I've learned and wanted to talk to you guys about is the long-term winner. The long-term winner is gonna be, in my mind, energy. Just based off his, and this is based off of, deep research and just continuous repetition and patterns. Tony Robbins talks about understanding patterns, and one pattern that I've noticed and heard time and time and time and time and time again is energy, and how much energy is important, and it's really important. Like, it's not just important for us, it's important for technology and the civilization in the world, that technology we ran off of using AI. And so how you can benefit in a world where technology thrives is by being invested into companies that supply, create, benefit, attribute to anything related to energy. Energy will be the number one source of all things of value. That'll be your picks and shovels for this era. You know, energy is this one of the many foundations for AI to thrive and be useful. And not only AI, but power as we know it. The lights, the cars, gas, energy runs through so many things. Energy runs through us. We need energy to run. So if we need energy to run, AI needs energy to run. If AI needs energy to run, a home needs energy to run. If home needs energy to run, a house needs energy to run. There are so many things that energy will be already are playing an important role in, but that will continue to play an even bigger role in the future. And so energy is going to be the number one thing to invest in and be invested in and have ownership of in the future, whether it's companies, whether it's something attributing to land, whatever the case is. You guys need to be aligning yourself with investing into energy. That will be my focus. Of course, tech as well, tech companies, but energy ownership is something that I definitely want to be in the ownings of. All right, so I want to share that with you guys because I've noticed how frequently discussed energy has been, and even now in the current time that we're in right now with the Iran war, we're seeing a lot of back and forth debates and confrontation about that. Oil is a very important role in energy as well, because it breaks down into so many different values and qualities of oil that we use it for different things, like diesel. That's where we get our diesel gas from. Regular gas, petroleum jelly. Like, there's so many things that we get from oil that we don't even realize. And so it's important to know these things, because as time progresses, the people who know these things will be the people who are in a better position in life. So these are things I want to be mindful of as the years progress and as time moves forward. And yeah, now I want to shift that focus from knowing what the long-term winner will be as time progresses into today's topics with Iran and what's going on with that. How much longer will this war go on? I honestly don't know. One thing I do know is the longer it goes on, the worse off America will be, because it'll create more uncertainty and fear. And also, especially if Iran is controlling the flow of oil, meaning where oil's transportation is being transported, the cargo ships. If the cargo ships are flowing oil still throughout the Strait of Hormuz, or whatever the name of that water is, and if that happens as well, that'll definitely play a big role into affecting the market. Not only just uncertainty and fear, because as we all know, fear and uncertainty creates market downside. And so in that market downside, we can probably see even more downside if Iran controls the cargo ships transportation, and how they're mobilizing and moving. Because last week we saw a lot of news and headlines coming out about how Iran claimed that they were dropping mines into the water to prevent them from cargo ships from moving to and from and throughout the Middle East. So that's a pretty crazy crazy thing to think. And if that's true, that can play a very detrimental impact to the value of oil and make it go up. And that's not good for any consumer, everyday consumer, because as I said, oil is used and needed in a lot of things. So how long can the war go on? I'm not entirely sure. The sooner it ends, the better, in my opinion. We just have to make sure that we're doing all our things that we can control. Because at the end of the day, that's what it comes down to. We have to make sure we're staying in the mind frame that we control the controls, but also being mindful of these things and talking to God and praying that everything's going well in those parts of the world, and that things come to a resolution sooner than later. So stay invested in the things that you already are invested in. Look into energy and take big risks. Those are my 3 things that I want to discuss today. And so with that being said, I hope you all enjoyed. Before we go, I want to say thank you, God. Thank you, God, for doing everything that He's done for me, my family, and friends. I thank Him for blessing us each and every day. There's a verse I wanted to read. Let me look at it. Luke 6, chapter 16, verse 10. One who is faithful in a very little is also faithful in much. And one who is dishonest in very little is also dishonest in much. It's not about having the most, having the most money, having the most fame, success, whatever. It's just simply about having the resources you have and doing what God wants you to do with those resources that you're given. He wants to see what you're capable of maintaining, handling, and doing with the things that He's providing. Because if you want more in life, yet you're not showing up and doing what's necessary now with the things that you have now, how can you expect God to bless you? A lot of times we get entitled with expectations and being in a space of wanting something, but we forget that we're already blessed every day. If you wake up, you can see out of both eyes, you can hear out of both ears, you can walk with 2 legs, hold hands with 2 arms, build with 2 hands. You're already blessed. You can breathe, smell, taste. You're already blessed. And of course, there's more things in life that would be nice to enjoy and be fascinated with. But at the end of the day, we have to appreciate the little things. Go touch the grass. I've said that before. Go catch a breeze of the wind. Though the little things matter just as much as the big things. And don't lose sight of God's intentions for you by comparing it to other people's lives. So seeing social media can very much diminish your value for your life. Don't let that be a thing. So that's just a food for thought. Once again, I like to drop the game like that on y'all. I hope you all enjoyed this. Thank you all for tuning in. This is the Rich Off Games podcast, episode 19. I appreciate you all for tuning in. If you guys are new, make sure to show love and support as much as you can, however you can. And I will see you guys next Monday.